Good afternoon, traders. Jefferson Fawcett here with Walsh Trading. Happy Wednesday, everyone. It is Wednesday, September 24th. It's a couple minutes after 3 here in the afternoon. Please keep in mind that futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. So what we're going to do here is we're going to run through all the major markets here over the next half hour or so. I'll give you a look at what my charts look like, see what I see here going on in the markets, and we're going to start off here with the cattle market. December fat cattle here for the day, down a $1.92, closing at 236.82 half. Had a pretty, why am I still getting, all right, we got to turn off the notification so that doesn't happen. Okay, that shouldn't happen again. Fat cattle finished down a $1.92 here, 236.82 here today, just below the 5-day moving average. That's at 237.13. The 10 days giving you a little bit of support just under the market here, right around this 235.58 area. Of course, this market's been in an uptrend here for quite some time. Don't really see fundamentally why it would slow itself down, but we made a contract high back here on August 27th. Kind of pulled back a little bit. Cattle on feed numbers here from Friday. Got a very bullish push here up with Monday's trade because that came out after the close. Now they're just kind of backing and filling here a little bit, in my opinion. I still think the market kind of wants to head higher. Expect the support to hold. My short-term averages, 5 and 10 day, they are on the buy side. Had really high volume though here with Monday's trade. Yesterday and today, of course, the volumes dropped off quite a bit. So, folks, it's not exactly, people aren't selling into this per se. They're just waiting to see if anybody else, I think, is going to buy into it. Fundamentally, for both fats and feeders here, we've got less cattle and more people to feed. I haven't seen enough damage to the chart to make me bearish on any of these. Yeah, they're going to be volatile, and yeah, they're going to pull back. But I think this 50-day average has been held. It's very, very good support here in cattle all year long. We breached through it a couple of times, once most notably here in the beginning of April, got down to that 100-day, but then bounced right back up again. So I still think in the long run, cattle prices continue to work their way up. Same thing here with feeders. Feeders finished the day down 295. My short-term averages flipped to the buy side here with Monday's trade when, well, November didn't, but most of the other feeder contracts moving back out all went limit up. Now, I think this might have been the reaction here in feeders on Monday, might have been more in reaction to the news that the border here with Mexico is going to stay closed for the foreseeable future. Allegedly, there's a case of screwworm within 70 miles of the U.S. border here at this point. And it's not far from home. I don't think they're going to open up the border anytime soon until they can get a lot of those mitigation efforts up and running and have them demonstrating some level of success for a period of time. November feeders finished the day down 295, 357.80. 5-day moving average just underneath the market here, give you support 355.32. The 10 days I've got down here right around this 351.40 mark. 50-day we got real close to here last week with Thursday's trade. Didn't really test it, but we bounced nicely right back up above it. And I think this is kind of continuing the patterns that we've seen throughout the year. Get real close to support, market turns and runs itself right back up. Seasonally, feeders tend to go lower from now until, well, the November contract expires. At the moment, I don't see that happening. Normally, that rally or that sell-off would have started way back here, the beginning of August, maybe late July. Instead, we made our highs here late in August, a little bit of a pullback, and now I think we're marching right back up here. Looking at December lean hogs here today, down 260. Big day down, set new contract highs here yesterday. Strong day up, $1.97 higher on Tuesday, closing at 90.72. Today's settlement 88.12, down $2.60. My short-term averages, they did flip back to the buy side here with today's trade, although this is a pretty bearish trade day here. Open up basically on our highs, closed basically on the lows of the day here. Not a particularly friendly sign here for hogs. I would have thought they would have maintained this, maybe tested up a little bit higher, maybe up toward that 92-cent range, and they still might, but they did pull back pretty aggressively here today. You're below both the 5-10-day moving averages. Stochastics made an ugly hook down. MACD is starting to turn a little bit more into the red here down there as well. Volume is pretty high today, and a big down day like that might get a little bit more selling pressure here as we progress through Thursday's and Friday's trade. Flipping over to the grains here, December corn finishing the day down at 2 cents here, 4.24 and a quarter here today. Yesterday's trade, Tuesday, we were up 4.5, 4.26 and a quarter. Today we're at 4.24 and a quarter. Started off the week a little bit lower, but we've seen good buying support here the last couple of days. On Monday, when we got below that, I call it 421 and a half or so. Same thing on Tuesday when we got underneath that level, got down to 420. Monday's low was 418. Tuesday's low 418 and a quarter. So once we got underneath that 420 mark, did see some decent buying interest there. Market's having a little bit of trouble. Had a nice rally here through most of the month of August and into, well, last Friday's trade. We've been trading both sides of this 100-day moving average here in corn. Closed above it for a couple of days, Friday the 12th. Again on Tuesday the 16th. And again here on with yesterday's trade, we got just up above it, but today we're right back under it. Short-term averages to 5 and the 10-day. They were on the bullish side here since August 20th, but if you can see that little blue cross that's right there, they are flipping over to the sell side. Doesn't necessarily mean the market has to trend lower from here. Just means the 5 and the 10-week day averages kind of slowing their roll a little bit. Now Friday's trade, we did have an equilibrium day, opening and closing at that same price, 4.24. We were up a quarter cent that day, but you got a directional close down outside of Friday's range here on Monday. And that might make things a little bit bearish, but I think corn, if it pulls back, maybe look for support around that 50-day average here at 414 3/4, 415 if that 420 support kind of fades away. I haven't had real good volume in the corn trade lately. Big volume up here on Friday the 12th because of the WASDE report. Ever since then, volume's just kind of been nothing great, nothing poor, but nothing great to write home about there. Corn market, I think, is probably going to trend higher here, although would I get really, really bullish now? Maybe 439 3/4, 440 is where I've got that 200-day average. Trend line here across the highs that we've had, well, for the last couple of years. Kind of puts that, I mean, this goes all the way back to the April of 22 highs here. And yeah, so there is going to be some resistance in the corn market. We'll likely struggle getting above 450 unless we see some sort of dramatic yield destruction here as we get into harvest. I don't think we're going to see that. I think the yields are going to pull back a little bit, but I don't think we're going to see any dramatic destruction from it. We're still going to have a record crop. But I do think corn prices have been trying to work their way up, and I think they're going to here in the near term. November soybeans, 10.09 today, down 3 cents, trading right back in this mid-range. This white little trend channel that I've got drawn on here. These are the highs that we had here September 24 and the highs that we had here in June of this year. Have not been able to break out of that. Conversely, on the low end, this is off the lows from last August of 2024, connected to the lows that we had here in this August. I think the bean market's kind of stuck in a little bit of a trend, downward kind of choppy trend like that. It's been sideways basically for the last year or so. Now some of these lows that spike lows we had, like the one we had last Christmas right around the 19th of December last year, the low we had here April 9th of this year, and the lows that we had here in August of this year, those lows are coming up a little bit, so we might find that's what this blue horizontal or this blue trend line is off of. Might find some support here today. That number's down around 980. Just don't see a whole lot to be bullish about here in soybeans. I know that a lot of folks are expecting the trade agreements to be made with our friends over in China, and that they're going to step up and buy just ridiculous amounts of soybeans from us. I'm not sure that they have the bandwidth for that. I think they've spent a lot of time and money and effort over the last couple of years ensuring that they've got multiple supply streams, us and Brazil. namely, to make sure that they get their needs bought. And I do believe that they're also building the world's largest grain export terminal in Brazil as well. The Chinese are building that. So I don't think that even if the trade agreement was made today, I don't think that China has either the capacity or financially or physically to buy a whole lot more beans from us here just at this point in time. Short-term averages here in the November contract, they turned to the sell side here with Monday's trade. Monday, we were down 14.5. Just don't see a whole lot to really be bullish about. Now, the last 3 days, we've kind of had matching lows, not precisely. Tuesday's low is 10.05. Today's low is 10.05 3/4. Monday's low is 10.06 1/4. So far this week, market's been very reluctant to break through that 10.05 mark with any real conviction. It has been giving some support, but we've yet to see the market really try to rally. Today's highs kind of ran into 5-day moving resistance. At one point, we were up at, 10.20 1/4. Well, that 5-day moving average is at 10.19. We bumped into that, got some selling pressure out of it. Kind of thinks we're going to head to $10 and then probably to 9.80 here. Stochastics getting a little bit oversold. Readings are 11 and 8 respectively. MACD's pointing down here as well. It's getting a little redder, and the moving averages are widening out a little bit. Both of those things are pointing towards some weaker prices here. I think we might need some significant outside influence to get the bean market fired up and bullish again. Perhaps the same thing here with soy meal. Soy meal's down $1.20 here today, 276.10. Today's close is the lowest close. I think I got to go back to the low close we had on July 30th. Certainly not a particularly friendly development, closing right at or very near the lows of the day here today. Today's low is 275.90. Closed at 276.10 is where the settlement price is. Soy meal market looks kind of heavy here to buy the way it's been trading here lately. I think we'll probably have new contract lows here. Look for that July 31st low at 270.260 to at the very least get tested, if not broken. Everything's pointing toward lower prices. Short-term averages 5-10-day turn to the sell side here with last Thursday's trade. 50-day moving average gave us resistance here, and the market kind of consolidated around that for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days maybe, until we started to break lower here this week. Soy meal's taking kind of a bearish turn. Volume's been pretty strong in the last couple of days. Would expect that weakness to continue. December soybean oil got a little bit of a bounce here yesterday, a little bit of a technical bounce here with Tuesday's trade. It finished the day up 19 after being all the way down to 48.89. They closed it yesterday at 49.88. Today you've got kind of an equilibrium day, opening and closing almost at the same price. The overnight open here last night was 49.88. The settlement this afternoon was 49.84. So 4 ticks difference. Technically not a doji, but certainly an equilibrium day. Also ran into resistance here from that 5-day moving average. I like the fact that the market bounced off this trend line here. That trend line is drawn off the lows that we had here August 8th and off the low that we had here on September 10th. That's what got the bounce up to the 50-day. Now we're pushing back for new lows for the move. Might get a little bit of a bounce up. Stochastics were relatively oversold, but they are kind of correcting that here a little bit with yesterday's and today's trade. We're only at 19 and 15. Not really an extreme reading there. Volume's been decent the last couple of days. I think bean oil, folks, this is the one market where I think we have a bullish story in it with the biofuel mandates being increased, and that's why the market jumped so hard here in the middle of June, those 2 strong days up. We just haven't seen any real follow-through from it. And if we can't get some, maybe look for the market to kind of hold along this downward trend line. If we do bounce, look for resistance here. 100-day moving average going to give you some right around that 52.10 perhaps. 53.20 is where I've got the 50-day. And of course, I've got trend lines drawn across the highs that we had here in late July and the high that we had here on August 22nd. That's going to give you some trend line resistance there right around that 54.36. I do like the fact that we bounced nicely here yesterday. Would have liked it even better if we got a nice strong move up. Everything's still on the sell side here on my charts here in bean oil. Looking at Chicago wheat, penny lower here today, 519.5. My short-term averages did flip to the sell side with yesterday's trade. Of course, yesterday's trade, we saw the market spike all the way down here to 507 and a quarter and then finish 520 and a half. Very strong recovery here off the lows, basically reversing everything that we did here on Monday. Today's a little bit weaker here as well, not aggressively so. I think we're getting close, but to a point, but the week hasn't quite done it yet. New lows here yesterday. We're getting close to, I think, what might be a seasonal low here for wheat, but I just don't see it quite yet. Market's really been consolidating and kind of heading lower here over the last month and a half, at least since August 5th to my eye. Looking at KC wheat, down 4 3/4 here in Kansas City today, 506 3/4. Same thing here in KC wheat. My charts flip back to the sell side with yesterday's trade. Very strong bullish day up, but the 5 and 10 day moving averages did make that bearish crossover. Tried to get up a little bit higher here today. Got up to 515 1/4 here on the December KC contract, but closing very at or near the lows of the day, 506 3/4. Not a particularly strong sign. You do have higher highs, higher lows today and yesterday. Reference Monday's trade. That's about the most bullish thing I can see there until this market closes significantly above that 50-day moving average. That's 526 1/4. I think we're going to have trouble kind of finding a low here for KC wheat. Could go sideways here for a while. Lately, I've been advocating this KC Chicago wheat spread, buying Kansas City, selling Chicago. I like the fact that it's been holding trendline support here for the last, well, since we made our lows in July, and that trend line is off the lows that we had here September 2nd. Tested it here last Friday, big strong day up here on Monday. Pulling back a little bit as long as this trend line support holds, and today that's right around that minus 15 cent mark, maybe even risk a close down to about 16 to 18 cents here. I do think this spread is starting to show some signs of life and starting to point towards some higher prices perhaps for wheat, but at the moment it's just kind of going sideways. Keep an eye on that spread there. Christmas cotton today, flipping over to the softs. Down 50 today, 66.14 we closed. This is the lowest close we've got in the cotton market since that September 5th low close there. Yeah, don't see a whole lot to be excited about here. Cotton market's kind of been working its way lower. It's been kind of a trading range, but the high end of the trading range has been getting sequentially lower here over the past 6 to 8 months or so. We did break out to the downside of that range. We haven't been able to stay too far under that here for the past several months. We did dip under it here a little bit late August, early September, rallied right back up to that 100-day moving average. Now we're right back under it here. Short-term averages flipped from the buy to the sell side here with yesterday's trade in these cotton. Not sure there's too much downside to it, but everything's still pointing toward lower prices in the cotton market, at least in my eye. March sugar here, 3 ticks lower here today, trading at 16.12. Made a new contract low here yesterday, getting down to 15.76, but did bounce and finish well up off those lows, closing at 16.15 here yesterday. Today we're a little bit higher. Got up to, at one point we were up at 16.28, but closing on the lows of the day. I think this overarching downtrend is still in play here for the sugar market. 5-10-day moving averages did flip over to the bearish territory here with Friday's trade. Stochastics had a little bit of overbought status, oversold status, and they are bouncing up a little bit. I think that might have been more in reaction to yesterday's very bullish close on high volume here as well, but not finding any real follow through. This 16 cent level might be some decent support right in here, but for the most part, I think the sugar market wants to continue to get lower from here. Coffee market, December coffee has been extraordinarily volatile here over the past week. We set new contract highs here a week ago tomorrow. Last Thursday, that market was up at 424 even. Today we closed here at 368.75, up 18.60 on the day. That's a 5% jump here in December coffee. Short-term averages flipped to the sell side here with Monday's trade here, but that's a little late, a little skewed following that dramatic sell-off over 1, 2, 3, 4, 5 days. We dropped from those highs. Had a little bit of an update here last Thursday. Pressure resumed here with Friday. not so bad here on Monday. Just up just a little bit, but big down day here on Tuesday. The most bullish thing I can see here in the coffee market, these long-term averages, the 50, the 100, and the 200 are all kind of converging here. The 50 is making a bullish crossover over the 100. The 100 is kind of equaling or very close to equaling here the 200 day, and it's kind of making it a little bit of a bearish crossover here. Long term, this market's kind of getting to a key support resistance level, I think. I don't know. I still like it from the bullish side. I think if we get down to the support down here around that 340 or so level, get closer to that 50-day moving average, we may not get the chance, but I think this coffee market still wants to turn and work its way higher. Looking at December cocoa here. 46 higher today, made new lows for the move yesterday. My short-term averages are on the bearish side. They flipped that way with Thursday's trade. Not sure if we're going to get back down and hit this trend line support that I've got drawn in here. This is just a low or a line draw off the lows we had here in March, or excuse me, late February to the low that we had here in the middle of July. It's kind of where I've got trend line support. We hit the trend line resistance here. Middle of August here, 11th, 12th or so. We've been working our way down here ever since. I think the cocoa market wants to kind of sag back toward that 6,400 mark, maybe 6,200 here over the next week or so. Flipping over to the metal markets. December gold today, it's still trading, but it's down $51.50 here at the moment. 3,764.20. Made new contract highs here. Very strong move up. Closed $40.60 higher yesterday. Posted a high of $3,824.60 an ounce. Getting a little bit of profit taken after that new contract high. We set a new contract high on Monday as well. Another one on Tuesday. A little bit of profit taken, backing, filling. 5-day moving average giving you support right there. That's 3,747.90. We're at 3,764.20. I think that support's going to hold. To my eye, I think it should, even though if you're looking for a further dip, maybe try against the 10-day moving average, which is down around 3,726. I do expect that to hold. I think the gold market wants to continue to work its way up. It's been very overbought here for the better part of the last month or so. Can stay that way here for a while. Stochastic starting to hook back down. Maybe we'll get a little bit of sideways or a little bit of a pullback. I wouldn't get bearish on gold here just yet. Use these dips to buy breaks here. In my estimation, I think the metal markets do want to go higher. Same thing with silver. Silver's down about 49.5, 50 cents lower on the day, trading 44.11.5 right now. Made contract highs yesterday, getting all the way up to 44.77 even. Contract highs here. Previous contract high was Monday, set another one Tuesday, backing and filling just a little bit. It's doing a little bit less in the silver than it is the gold. I think folks are really expecting the silver market to get up toward that $50 mark. Here I can't say I blame them. Trend has been up. Now silver's a little more choppy, a little bit more back and filled than maybe the gold market is typically. I still think the silver market wants to go higher. 5-day moving average giving you support here, 43.59. The 10 days at 43.10. So if we do get a pullback there, aggressive and well-margin traders may do well to consider long positions there. My short-term averages have been on the buy side here since August 25th, and they are still pointing toward higher prices at the moment. 50 days pointing up, 100 days pointing up, as is the 200-day. I think the trend is up here in silver. December copper, a big, huge day up here today, almost 4% higher. 1810 is the last I show. Bounced off this trend line support that's I've drawn off the lows that we had here from July 30th to that low that we had here on September 18th, last Thursday. Big jump up here today, closing up, well, assuming they settle it here sometime in the next 35, 40 minutes, we'll get a final settlement price for it. But we're back up above that 200-day moving average, flirting with the 50-day moving average here right now. Now the 50 and the 100 did make a little bit of a bearish crossover here earlier this month here on September 16th, 17th here last week. But in the long run, I do think the copper market's bullish. We can get manufacturing back on track. Almost everything that's almost everything that's manufactured here today that has significant value anyway has some sort of copper in it. So I do think the copper market wants to bounce. I think this big sell-off that we had in reaction to the tariffs on raw copper getting pulled here just was kind of a temporary interruption. I do like the copper market from the long side. U.S. dollar index here today. Short-term averages, 5-10-day, they are hooking back over toward bullish territory. The dollar's up 97.51 here today for the December contract, up 67 here on the day. Still been sideways here for the last 2 months though, or maybe 3 months, going all the way back here to the middle of June. Been a little bit lower, we've been a little bit higher, don't have much of a direction to it. The 50-day moving average, it's almost a flat line. That's a 97.53 here today. The 100-day moving average is still declining and still got a little bit of a declination to it, but that's a 97.76. That's almost always almost a flat line here as well at the moment. Short-term average is pushing up, but I think we got to see a significant close above that 97.76 or wherever the 100-day average is. When they do cross above it, that's going to get things excited. Until then, I don't know, maybe there's just too much resistance here on the dollar. Bond market, ever since we saw the Fed lower rates here by just a quarter point here last week, bond market spiked to new highs here for the move with that announcement last Wednesday, getting all the way up to 118.21. Ever since then, it's been working its way a little bit lower. Buy the rumor, sell the fact. That seems to be the textbook version of what's going on here in the bond market here. Now, when I look at FedWatch, they are posting or expecting the next Fed market meeting here at the end of September or at the end of October to have another rate cut here as well. So I would expect the bond market, once it finishes consolidating here, probably going to turn its way back higher. Short-term averages 5 to the 10-day, they are on the sell side, and today we were down a whole 9.30 seconds here. Last trade I've got is 116.10. I don't think I've got a little bit of a dashed line here across the highs that we had here earlier in August. I think that level of support should hold. Those August highs here were 115.17. We're currently trading 116.10. I think that 15.17, 15 half level should hold as support. If it doesn't, well, then we've got a whole different ball of wax. There, 10-year notes down 9 here today as well, 112.19. This one looks a little bit more bearish. The short-term averages flipped to the sell side with last Thursday's trade. Didn't get a huge bullish reaction out of the Fed meeting here from last week. They did spike up, but did not set new highs for the move, and then the selling pressure came in. Same thing here when I said in bonds. I expect these highs that we had here in August to kind of hold as far as support for the 10-year notes before we start heading higher in anticipation of another rate cut here at the end of next month. Looking over to the stock indexes, made new highs here in the S&P here earlier this week. Tuesday's trade was still very strong. Today we're down about 18. Don't see anything here too damaging on the S&P chart, at least in my estimation here. Are flirting with that 10-day moving average. That should offer us a little bit of support, but if it does get broken, I think that'll just end up being a buying opportunity. I'm still of the opinion that the stock market's in pretty good shape and that dips should be bought. I know seasonally it tends to go a little bit lower here during the month of September and October. We haven't really seen that yet, except for the last 2 sessions, and 2 days does not change a trend here in my opinion. NASDAQ futures are down about 81, also bouncing off that 5-day moving average. And much like the S&P, those averages flipped to the buy side or bullish territory here Tuesday, September 9th. Set new highs here with Tuesday's trade, backing and filling here just a little bit. Same thing with the NASDAQ. I think dips need to be bought there. Dow futures down 155 today. They spiked up, made a new high here, new contract high for the Dow futures with yesterday's trade getting all the way up to that 47.055 mark. Today we're trading 46.479. We're down 158 or so on the day. I think this is just a little bit of profit-taking pullback. Short-term averages turned bullish here on September 10th. Flirting with that 5-10-day moving. Well, we're flirting with the 5-10-day average here. That's at 46.441 right now. We're at 46.479. So that is still giving us some support right there. But much like the other indexes, I think you buy dips here in the Dow. Russell also made a new contract high here with yesterday's trade. I believe that's, no, not a contract high, just a new high for the move. My mistake. New high for the move here in the Russell yesterday, getting all the way up to 25.10.30. Today we're trading 24.58.20, down well, a little over 18, almost 19 handles here on the day. I think stock indexes still at this point deserve to be bought here on dips. Maybe you wait for a little bigger dip, but I still think they need to be bought on dips. And finally, finishing off with the energy markets here today. Crude oil's up $1.41. Last trade I show is 64.82. This is the highest we've traded here since September 3rd. Market spent a good couple, 2-3 weeks here, kind of consolidate, chopping around, bouncing around that 100-day moving average. That's the white one on there on the chart there, bouncing right back up. Unless we can break out over those September 2nd high, which was 65.43, unless we can close up there and start moving much more toward that $66 range, yeah, I think this overhead resistance might hold. But hey, let's look and see what a trend line does. Just off the highs that we had here in June to the highs that we had here in late July. Well, according to this, we're in an uptrending market here right now. We're above the 50, we're above the 100, we're above the 200-day average here in crude. I just think it's been a kind of a choppy range here for the last couple of months here since late June. That's my estimation on it. Yeah, I don't see anything here at the moment to be real friendly about unless we can get that close up over those September highs. Looking at November RBOB, unleaded gas, it's up about 2 cents here today. Not nearly as friendly as the crude oil is. Short-term averages 5.10. They actually hooked at the sell side yesterday in the RBOB. You had good volume here today when we are pushing our way higher, but I think there's just been congestion and consolidation here in this market for the last several months. Doesn't seem to have much of a trend-wise direction to it. You sell the upper end of the range, you buy the lower end of the range, you just kind of trade it in and out that way. That appears to be what's been working best here in the RBOB market here, at least since the middle of June here to my estimation. Yeah, I just don't see a whole lot much of a trend direction here with unleaded gas. Same thing here with diesel. Now we did bounce a little bit here. Short-term averages flipped to the sell side here with yesterday's trade. Yesterday you had an update here up about 3.5 cents. Today they're gaining about 4.5 cents. Currently 236.68, bouncing off the low end there. The 100 and the 200-day moving averages did make a bullish cross here earlier in this month, maybe Friday the 12th or the Monday the 15th, depending on how you look at that measurement. So long-term trend is a little bit higher here for diesel prices, and winter is coming, and diesel is going to be, heavily in demand throughout the Northeast if we have a bad, cold winter. Speaking of winter, natural gas here, November contract made a new low here yesterday, getting down to 305.5. Today we're trading 314.5 almost. So we finished the day up 4.5 cents yesterday, well off the lows. Today's kind of an equilibrium day here for nat gas. Don't see a whole lot to be bullish about. I know folks are talking about the Europeans starting to buy much more LNG, perhaps from us, but certainly not from Russia. That would be somewhat supportive to our market, but I think our nat gas production is through the roof these days, in my opinion. Stochastics, they're out hooking up a little bit. Still oversold, but they are kind of pointing toward higher prices. MACD's down here in the red there. I just don't see a whole lot to be bullish about here in nat gas. I'd give this kind of a wide range. Might have set one here from about this 307, 306 area up to about 340 or so on the high side until we can break out up above that. I wouldn't get too bullish here on natural gas unless we start breaking off to new lows here. I wouldn't get too bearish here just yet. I do appreciate you guys listening. Today's video is about 33, 34 minutes long. I'll have another one here for you next week, folks. If you need anything in the